Hello, Empower You, and welcome to another episode of Mortgage One on One. I'm Cynthia with the Rebecca Foote Mortgage Team, and I'm here to talk about FHA loans. So let's get started. What is an FHA loan? An FHA loan is a government backed mortgage insured by the Federal Housing Administration. So, what this means is that the government insures the loan and will pay back a portion of the loan to the lender if the lender must foreclose on the home on the buyer. So, in the eyes of the lender, this is less risky because they're not on the hook for the whole loan. Who can use an FHA loan? Anyone can use an FHA loan. Unlike VA loans that are specific for veterans, FHA loans can be used by anyone. So let's say that your buyer has a low cash on hand, but they have a good credit score. Well, the FHA loans allow for the most seller's assistance and a lower down payment. So I'll go more in depth on this later. And the threshold for credit scores is a lot lower than conventional loans. And this goes back to what I said earlier that the loans are insured by the government. So the lenders are more willing to take a chance. And FHA guidelines are not as strict when it comes to debt to income ratios. Now, remember to find the debt to income ratio, you take all of the debt, which is your mortgage payment, your credit cards, your student loans, your car payment, and even child support, and you divide that by the gross monthly income. And FHA loans are a great alternative to USDA loans because they're not specific to rural areas. Now, what are the basic details? The minimum down payment for an FHA loan is 3.5%. Now, let's say your client has the good credit score, but they don't have cash on hand. FHA allows for a maximum 6% seller's assistance. And if you're not sure what seller's assistance is or how it works when you're writing an offer, please check out our video, Seller's Assistance Explained, on our channel. Monthly mortgage insurance is required for any loan except for VA with less than 20% down. So, what this fee does is it protects the lender if the borrower does default on the loan. And for FHA loans, it's um, unlike a conventional loan, it is fixed depending on the loan to value. So if the borrower puts a minimum 3.5% down, no matter what their credit score is, it will be 0.85%. We've seen some conventional private mortgage insurance rates at 1.2%, and that's a huge difference in a monthly payment. So that can be a deal breaker for some clients. If you want more information about mortgage insurance and how it affects the monthly payment, please check out our video, Mortgage Insurance Explained, on our channel. And unlike conventional loans, FHA loans have an additional 1.75% upfront mortgage insurance premium that's required. Now, unlike the name says, it does not have to be paid out of pocket upfront. It can be added back to the loan. The borrower could pay for it upfront, but it's an all or nothing deal. So you either pay all of it or it all gets rolled into the loan. The minimum credit score that's allowed by FHA is 580. Now, keep in mind that when you go this low, there will be some red tape to get through. So there could be some additional conditions, there could be some extra paperwork that's needed. So it'll be a little bit more work for the borrower or for us, and we're okay with that, but just know that there may be some red tape. Gift funds are allowed by someone other than a relative, and the client will just need to prove that they have a relationship with that person. Now, whether that could be Facebook photos, it could be a letter from the church clergy, or it could be minutes from a meeting in an organization that they're members of. We just need to show proof that that relationship exists prior to this loan. And there are no income limits for FHA loans either. Now, what are the general property requirements? The property must meet HUD guidelines, which also means that a specific HUD appraisal will be required. Now, some of the things in the guidelines include chip paint on the windowsills, broken windows, cracked windows. It could be making sure that there's handrails where there's stairs. And they're really just looking out for the health and safety of the borrower. We do have a handy cheat sheet. If you don't have one, please reach out to us and we'd be happy to get you one. The maximum loan amount for 2022 in central Pennsylvania is $420,680. Now, this number changes every year, and it is 65% of the conforming loan limit that's set by the Federal Housing Finance Agency. And remember, this is the loan amount, not the purchase price. So if the home has a $440,000 purchase price and they do the minimum 3.5% down, and that's $15,400. That would make the loan amount $424 and $424,600. And to qualify for the FHA loan, the client would need an additional $3,920 to bring that loan amount down to the 420,680. And technically, there are no inspections that are required for an FHA loan, which means you could have an FHA non contingent offer. However, if the home has a well, depending on what the appraiser says, then the water test may be required. But unfortunately, we're not going to know that up front. We have to wait until the appraisal comes back. And of course, if you have any questions, please don't hesitate to reach out to us, 717-609-4044. You can email us at teamrebecca@footecapital.com, or you can contact us through rebeccafoote.com. Thank you for watching another episode of Empower You. We're here to help you. And if you enjoyed this video and want to see more, please check out our other videos and don't forget to subscribe to our YouTube channel. Thanks. Have a great rest of your day.